Hey guys, how's it going today? So today I'm going to do a quick video on some things that you might have missed from the conference call that Apple had from last quarter. Now, these types of things here are pretty easy to, look up and find. I mean, we saw, net sales, pretty damn healthy growth. We've seen net income grow. If you're looking at their balance sheet here, even this is growing. They have over 100 or 285 billion between short-term marketable securities, cash, and long-term marketable securities. And if you're curious, these are classified different. It's just basically whether or not they're classified, like they are in equities or whatever. Long term would be something that they just basically classify as short term, and this would be something that's classified as short term, and this is obviously the cash equivalents. So I mean, these are things you can look through, and it's just strength and strength and strength. But there's been some concern, as always, like I said, about essentially the growth of the iPhone, the reliance on the iPhone, and the idea has always been that Apple is too reliant on that, and they're not adaptable. But the same argument was being made when they were relying on the iPod. Um, and different products as well. So I was listening to the conference call and I just took some quick notes. And these are things that came directly out of the conference call that I thought were just phenomenal. I mean, aside from the fact that we're seeing record profits, record revenue, record cash, these are little known facts that maybe people didn't actually see. In this last quarter here. So, I mean, they always talk about user growth, and that's basically the number of people that are using their products. And there's always been concern about, penetration into China, that there's too much competition there, that we're too saturated in North America and Europe. But we've seen in the last 2 years 30% growth in 2 years. And one of the arguments that I'd always heard is, very little user growth is expected. Everybody already has an iPhone and other products as well. And this is across all their devices. But take that for what it's worth, 30% growth. Last quarter, there was all the chatter about why the stock was down after that for a bit was that, we're hitting record numbers of revenue. They're not going to be able to keep it. 13% higher from the previous record again here, guys. So revenue. As I said in my last video, and I'll put a link in the right-hand corner right now to that one, is that this last quarter was only 13 weeks, and I believe, or 12 weeks, and I believe the one before that, the year-over-year one before that was 13 weeks. So that's a little thing that a lot of people maybe didn't quite understand. So if you actually look at, the revenue per week, it was 13% higher, but if you look at average revenue per week, it was actually 21% growth. And this was because of the week less. So, and highest revenue of the iPhone ever, which is a huge driver of it, probably around 60% of their revenue, I believe. You could look in their financials. This is the part that I think is going to be key to Apple in the future. So services, right? It's the size of a Fortune 100 company now, and it's up over 18%. So it was 8.5 billion this quarter. So that's the point that I'm trying to make when you look at Apple. You look at it in terms of what should it be worth. Just their services division alone is 8.5 billion, and they're trading at a multiple of 16. And we've seen a pullback here lately, so I mean that's one of the reasons I'm making this video. And I believe, like I said, it was nearly about the same increase before. Like it's growing. Like last quarter, it was another 18% again. So it's growing just phenomenally, and that's probably why they have this goal. And they're saying that their goal is to double their service revenue of 2016 by 2020, to double it. So that's a huge bet. So I mean, look at where we're at right now. I don't have the 2016 on me, but it's going to be huge. Even little things like the App Store. So they were saying the week, don't mind my spelling here, the week beginning December 24th, there was $890 million in revenue in a 7-day period just on app purchases. And then they were saying 300 million of purchases just on New Year's Day alone. $300 million on one day. I mean, the reason I mentioned this one is because it's hard to get the scope of how much money this company is making and how it's still accelerating and how ridiculously cheap it is. But I mean, like you're looking at almost $1 billion in 7 days, and that's not iPhones, whatever. That's just App Store revenue, guys. That's what's so crazy about it. Um, so they also break it out. 58% growth in paid services. So I suspect this is Apple Music. They're saying that they don't give the numbers, but they're briefly saying that Apple Music is growing phenomenally every quarter. Um, so this is a huge driver of the services that's up 18%, but 58% just in that alone, which is a good diversification there as well. And then another little thing that is arguably not like the best product to break away. I mean, arguably, augmented reality is going to be better, and we really see them pushing AR kit and stuff like that. But we're not really seeing too much of exactly what they're doing with that right now. But there's been a lot of bearishness on their watch, um, and they don't ever usually break it out. But they did say that 50% growth on both revenue and its units for the fourth quarter in a row. So 50% growth on the watch. And Series 2 saw twice the sales volume as a Series 1 watch, which isn't too, um, it isn't too surprising because now this isn't so reliant on the iPhone. Now you can make calls without your iPhone and stuff like that. And that's arguably something that should have been in the first one. But watch is just kind of like a supplementary product I see, and I don't see it being a real huge driver for the company. But this is showing that it's still there. It's growing phenomenally, and past my expectations as well. And another small one, Beats. They purchased Beats, several years ago here for what was it, $3 billion, which is nothing to them. So if you add Beats and wearables, the revenue is up nearly 70% over the year. 70%. So there you go. You wanted to see the growth. The growth is huge. So that's second only to iPhone in revenue growth in terms of contributing to the revenue growth. So if you think the reliance is all on the iPhone, think again. And another little comment that they made here is that the iPad is actually seeing growth. And many of these seem to be first-time buyers. So what that's telling me, along with they also mentioned Mac as well, is that they're actually getting quite a bit of penetration into emerging markets, and that's why a lot of them seem to be first-time buyers. So that would make sense to me. So yeah, I mean those are basically the highlights that I thought were so incredible. And just to look at even on their financials here, you can see the growth year over year when I'm talking about, China, stuff like that. 11% in China, Europe 14%, America's 10%. Their sales are up in every region by double digits. And that's what they kept touting in their call. Double-digit growth in all areas. I mean, that's incredible. We've seen, and even net sales by product, we're seeing the iPhone up 13%, the iPad up 6%, which is surprising. I mean, I expected there's not too much new. Once you have an iPad, you have an iPad. But I think once they start putting AR in there and updating it a bit more, we're going to see that grow more. Mac is down, but I expect that to continue to drop. And Apple expects that to continue to drop. I mean, they're trying to get away from that, as we all know. They see a future without it. They see their iPads taking over. There's kind of that annoying commercial out now. What is a computer? That's their newest ad. So that shows you where they're going. They're not focusing on that. But even though many companies might be salivating to have $6.8 billion in sales, that's just one of their categories that they're not so interested in. Services 18%, and yeah, so everything is up. I mean, it's quite incredible. And there's a lot of things to look at in here. If you go down, you can see how much is percentage of their revenue. I think I spoke about this before. The iPhone, it's about the same. It's a little bit more. I expect to see the percentage of the revenue drop. Percentage of the total net sales. So they really break it down here, and you can see how much each product is generating towards the revenue. So the question is, should you buy it? Yeah, I mean, I'm always bullish on Apple, but we've seen some kind of crazy market moves in the market lately, dropping, and consequently, it's brought Apple down here. But in my opinion, this could be the correction that we finally see. But in my opinion, there's no real driver that should be making these markets tank like this. I mean, interest rates are going up. There's concern like that, but we have too much good stuff. I mean, the new tax reform, as I mentioned in my other video, is just incredible for companies. They're giving out, over 1 million U.S. Citizens of these companies are going to be getting, $1,000, $2,000, $2,500 bonuses. Minimum wages are increasing. So unless something catastrophically goes wrong, I could see it tanking. But at this point, I think it's just healthy. And to be able to get Apple at a discount, given the fact that they just produced such a phenomenal quarter, and and aside from just the financials, just looking into it, like some of the facts I gave you, how it's growing from internally, organically, it's just a steal of a deal. So I thought I'd do a quick video on that today, guys. Let me know down below if you liked it, if you have any questions, if you want more videos like this in the future. Don't forget to subscribe and hit that notification button so you know when I release a new video. Anyway, that's going to be it for today, guys, and I will see you in the next one.